Welcome to Network and Chill on the Couch. We're going to be hosting a series of talks with investors, entrepreneurs and startups who'll be giving us a little bit of advice, some tips and an insight into their personal journey. So we're joined by Hammond today, who works for SyndicateRoom. So we're really excited to have you on the couch.
Thank you for having me, really appreciate it.
So give us a little bit of an insight into what is SyndicateRoom.
Yeah, of course. So SyndicateRoom is an investment network for sophisticated and high net worth investors. We operate very similarly to a crowdfunding platform. We have an online digital platform where investors can go, they can view investment opportunities, they can view information, they can interact directly with those companies, and they can make their own investment decisions and transact through the platform. There's a couple of key differences to keep in mind between us and I guess what you'd call traditional crowdfunding. We only cater for what the FCA would call sophisticated high net worth investors. We don't cater for what they would call everyday retail investors, with minimum sizes of investment sizes of £1,000 for an individual investor into an individual company. We're also what's referred to as an alternative fund manager. So we have our own capital, which we invest alongside our investors into early stage companies.
Nice. And your role at the company is senior analyst?
That's right. Yeah.
What does that mean? What does that entail? What's your day-to-day at the company?
Well, that's a really good question. So I think when people hear the title senior analyst and they think, well, that's a pretty established role. The reality is that SyndicateRoom is still an early stage company in itself.
So how long has the company been around for?
So we've been trading for about 5 years now,
Nice.
which means that part of my role is not just to do what you would expect a senior analyst to do, but to do everything else as well.
Yeah.
But generally my role is to deal with companies that are looking to invest looking to raise investment from SyndicateRoom investors.
So your role focuses on finding startups?
Yes, that's exactly right. So finding startups for the platform, also finding startups that might be suitable for some of our contacts, maybe at a higher level. So VC, ultra high net worth, institutional money that's looking to invest maybe slightly larger amounts, and also working with our funds as well. So we have two funds. We have Fund 28, which operates passively, so it goes through the platform at the moment. And then we have the Growth Fund. And the Growth Fund is a more traditional managed investment model, again, co-investment like Fund 28. But my role as senior analyst is I do a lot of the work with the Growth Fund, working with things like process, working with due diligence, and then presenting that to our investment committee and specifically our chief investment officer who runs that.
So give us a bit of an insight into what makes a suitable startup for your company, and then maybe what doesn't make a suitable, because I'm sure you've had to say, I'm really sorry, you're not ready yet.
It's really difficult because part of my role is to be both realistic but also to be open-minded, and it can be very, very difficult when you're dealing with early stage companies because early stage companies tend to be very passionate projects. So we as a business, as SyndicateRoom, we're sector agnostic. We don't discriminate based on sector. And really, if any company comes to us with suitable lead investment, we will take a look at any sector. There's a couple of caveats to that. Mainly for us, it would be traditional gambling, and then things like traditional like narcotics and things like that, obviously. But when we come across companies, there's a couple of things that we may see that might make us decide at an earlier stage not to progress with the review. That would be things like the lead investment's not from a suitable source. So as a co-investor, we rely on that lead investment to set valuation and share price for the round. And if we find that lead investment has come either from current majority shareholders, or it's come from wealthy family members, or it's come from investors that are loads of investors putting in very, very, very small amounts, we may not feel that the valuation share price has been suitably validated for us to follow on that
So
basis.
you kind of advise that if someone is approaching your company for investment and they've funded it from family members, you don't really proceed with?
We look at lead investment as a whole. So as a co-investor, like I said, we rely on that lead investment. But we look at co-investment as a whole, and lead investment doesn't have to come from one single big investor. It can come from multiple sources, as long as it's equity and it's all being invested on the same terms. Now, as part of that lead investment, you might have the bank of mum and dad, or you might have friends, or you might have colleagues, or you might have majority shareholders all investing as part of that lead investment. But what we want to see is suitable validation from either a new investor coming into the round, a minority shareholder who's upping their stake, something along those lines of someone who's coming in with the ability to negotiate, the ability to review, but also the drive to get the best value possible. We don't want someone who's looking just to protect their current shareholding by settling for a slightly higher valuation than needs to be settled for.
Okay, understand. So in regards to, if we're moving into the investor side of the business, what makes a suitable investor for the company?
Okay, again, a very good question. So as I mentioned, we only cater for what the FCA would call sophisticated and high net worth investors. Now, that's down to FCA definitions, and FCA definitions can change all the time. I mean, they're a government organisation, so of course they can. At the moment, they would be sophisticated, would be around how many directorships or how many early stage investments you've held. High net worth would be about personal wealth. I think at the moment we're looking at has an annual income of over 100,000 a year, and has asset value of over $250,000 without including your primary property. I think that's the definition at the moment. So those are the sorts of investors that we're looking for, and alongside that we also have some smaller institutional investors, family offices, small pension schemes, things like that might also be investing as well. So through the platform, those are the sorts of investors that we tend to see. When we look at lead investment, we ideally want to partner again with either angel investors who are coming in with relatively large investment sizes, ticket sizes, or institutional. We're talking about VC, we're talking about family office, we're talking about whether it's just private funds or syndicates of private investors. You see syndicates all over the country in usually groups from local cities and things like that. So those would be the ideal types of investors that we see.
That you're looking
Yeah,
for?
Yeah, definitely. We're definitely looking for that. We don't cater for that retail investor, that everyday retail investor. There are platforms out there that do. They just don't tend to suit us that well. The key reason for us being is that although we're sector agnostic, we tend to see a lot more in relatively IP heavy sectors. So about 80% of our portfolio is B2B. About 34% of our portfolio is what we call life sciences, so medtech, biotech and pharmaceuticals. We do a lot of software and SaaS, we do a lot of hardware and engineering. We don't tend to attract the big retail players, and that's fine. We are more than happy to take a look at those companies, and we're very keen to get involved and diversify our portfolio more, because diversification is key. But we tend to see more from the B2B side.
So how do the founders benefit from SyndicateRoom?
Yeah, so that's a really interesting question. It's something that comes up quite a lot. There's a lot of focus, especially from the VC and institutional community at the moment, on what we would call value add. So it's about what the investors can bring along to the company other than just money. Now, SyndicateRoom sits in a space where we're actually a relatively passive investor. So we're looking initially to bring capital, and capital is really the main focus for us. And we then group our investors under a single nominee entity, and the nominee entity is what sits on the cap table. And we sit there relatively passively. We're following lead investment. We're not looking for board representation. We look to protect basic investor rights, which we would hope a lot of them are protected anyway, mainly preemption, voting, drag-along and tag-along rights. But we're not going to be too intrusive. Now, when the company wants to reach out to those investors, they can do so through our nominee. So if there's any specific asks and the company wants to know anything about legals or marketing or networking opportunities or anything like that, then they can reach out to those investors, and those investors can interact directly. We can make introductions. Other than that, we're going to sit there relatively passively. We're happy for the lead investment to take that lead. Obviously, as part of our review process, we're looking at the current board position and who's involved with that. And that's one of the things that we want to be comfortable with. And there are other investors out there, mainly the big VCs, mainly bigger private institutional funds, that may be able to bring more in terms of value add and board representation than SyndicateRoom. But then at the same time, what we're doing is we're saying we're happy for that to happen, and we'll sit here relatively passively, and we'll be here for when you need us.
So what's the onboarding process for a founder to join the platform?
Yeah, so if a company's looking to raise money through SyndicateRoom, the first thing that we need to do is we need to understand a bit more about the company's requirements. We have basic criteria that we need to make sure that we keep to whenever we're reviewing companies. The criteria are quite strict, but SyndicateRoom probably gets approached by somewhere between 200 and 250 companies every single month looking for funding. So we need to make sure those criteria are quite tight. Those criteria are, first is lead investment. So we're looking for at least 40% of the round to already be committed before we can then interact and we can do our due diligence and review. The company needs to be based in the UK or Ireland. And the company needs to be raising at least £150,000. And there needs to be at least £100,000 gap for SyndicateRoom investors. If the company meets those requirements, we do actually have an online application that the company can fill in. It's very short, it only takes about 5 minutes to complete. But what it does, it allows us to collect the very key information that we need. Likewise, the companies can reach out to us. I'm on LinkedIn, and my LinkedIn is always open for people who want to drop me a message and get involved. We have a contact us form on the website. If the company's got any questions, we've got FAQs. But if the company wants to fill out the application, we will then get notified of that, and we can then get back in touch with the company.
And then do further connections with them to see if they're...
Exactly.
Right.
If from that initial application it suggests that they don't meet our criteria, then we would get back in contact with them and we would let them know. If it says they would meet our criteria, at that point we would organise a phone call with them and have a conversation about how we can help, how we can get involved, and whether they actually do meet our criteria, because we get a lot of companies that come and they don't quite understand the funding world, which is absolutely fine. So they don't quite understand some of the terminology, and they don't understand what's meant by lead investment. You know, is it all the investment I've ever had, or is it just the investment in this round? So sometimes there's confusion, and that's absolutely fine. That happens, and we can have the conversations with those companies, and we can make sure they understand.
So since SyndicateRoom has started, how many companies have you invested in?
Oh, it's a good question. It changes all the time. That's the problem. Our portfolio now is about 150 companies. Our fund portfolio is about 64 companies. And that's 64 companies that would also be part of the platform portfolio. But what we also find is that companies come back to us for multiple rounds. So in terms of the rounds that we do, we protect preemption for our investors, and preemption is something that we offer on the platform as well. So we have companies that come back to us for preemption, we have them come back for other rounds, and so actually in terms of rounds, we've got much more going on that 150 portfolio that we've already got in place, because we're constantly looking at those companies, seeing if we can do more for them, see if we can raise again, and then help them with their preemption with their current investors.
It's not just one investment they'll get from your company, there is potential for them to get other rounds from your platform.
Exactly. You can come back to us as many times as you want, and as long as when we review you still meet our criteria and we're still happy with how the company's progressing, then we're more than happy to take a look again. And likewise, the preemption's done through our network as well, and our investors do have a little bit of follow-on ability, so we can organise that, and then we can bank that investment as our single nominee investor as well.
So how much money has Syndicate raised in total?
So we've been involved in about 200, I'm trying to think of the figures on the website now, because otherwise I'm going to be shot by my marketing team. I think current figures on the website, we've been involved with about 215 million.
Wow, 215 million.
Yeah, been involved with about 215 million and always growing. We're closing rounds out at the moment. We're raising significant amounts of money. Our average round size is about 750k. But we're relatively regularly involved in those rounds of over £1 million plus. The key part about SyndicateRoom, the key thing to stress is that I don't want to put us across as an old style fixer. It's not a case of, you need £1 million, we'll get you £1 million, don't worry about that. It's about, we are part of what is a larger round. We're always part of what is a larger round. We like to follow sophisticated lead investment into rounds, and our due diligence reflects that. And that's what we're trying to encourage for our companies, and we're also trying to encourage for our investors, because it's important our investors understand who they are co-investing alongside.
So give us a little bit more information about the fund section.
Of course. So the first fund to be aware of is Fund 28. Fund 28 is really our flagship fund, and really the fund that gets the most publicity for SyndicateRoom. It's a passive EIS fund, and it's what's called a pre-qualified fund. So it has to deploy across a single tax year, and at the end of the tax year, the investor gets a single EIS 5, which represents all the individual investments that fund has made, rather than the individual EIS 3s, which they would usually get making EIS investments. The reason that we call it Fund 28 is really important. It actually comes from a study that was previously done about portfolio diversification. And the point of Fund 28 is that it deploys into at least 28 EIS qualifying companies across the single tax year. Across the last 2 years, we've actually deployed into 32, both years. And really what we're trying to encourage is that diversification is really the only free lunch with finance and early stage investing. It's really important that your portfolio is diversified, And actually, if we look at the best performing funds in the UK, actually the majority of those funds work on the co-investment basis. So it's people like the London Co-Investment Network, it's people like the Scottish Investment Bank, who are diversifying across loads of different companies and are co-investing against strong lead investors. So Fund 28 historically is always deployed through the platform. It follows SyndicateRoom investors. The new Fund 28, which we're raising for at the moment, that fund closes on the 1st of April, is actually a little bit different. It has the ability to co-invest alongside specific investors at a slightly earlier stage, potentially. And then maybe that's something we can open up to other private investors as well. So we're doing things a little bit differently now, but we're hoping that it's going to make a real big impression on the industry. The other fund that we have is the Growth Fund. Growth Fund's a little bit more simple because it's more of a traditional managed fund model. As the senior analyst, one of my roles is to deal with the process and the reviews that surround the Growth Fund. It's really pegged against our portfolio, so it's companies in our portfolio that are looking to raise at a slightly later stage. Ideally, we're looking for rounds of 2 million plus, and then the Growth Fund will look to deploy anywhere between 200 to 250,000 pounds alongside lead investment. We are probably about halfway through deploying that at the moment, and the portfolio is looking really, really interesting. So I'm looking forward to getting the rest of the money out the door.
So how many investors are on the SyndicateRoom platform?
So at the moment, we've got somewhere between 30 and 35,000. We deal with a global network of investors, so it's not just UK based, although the majority are UK based. They benefit from SEIS and EIS tax relief. But other than that, our second largest investment market is actually Singapore. We have a relatively large European contingent. There are countries that we can't deal with, mainly North America, so Canada and the United States. China is a very difficult one. Japan is also quite difficult. There's a few that because from a regulatory perspective, we just can't deal with. But generally, we're very, very broad. So
all the startups need to be from the UK and Ireland, but the investors really are global. That's right. So and the reason is actually we have the ability to raise for any country across the European Union at the moment. We're still in the European Union as of this video, but we have the ability to work across the whole European Union. But we've chosen specifically to focus on the UK and Ireland. Ireland mainly because it's got a very, very similar legal system and obviously a similar language to the United Kingdom, and it just from our point of view makes it easier. The UK is a very, very dynamic market. It's by far the biggest venture capital and early stage market in Europe. So it just makes sense to make sure that when we're looking at startups, when we're looking at our model as well, that we're perfecting it here and that we're bringing value to the UK first. Maybe we go out later. In the future. Maybe, but at the moment we're focusing very much on the UK. So if we were looking at some advice for people viewing the video, what advice could you give them if they are a startup? What frequently asked questions that people don't really understand that maybe you want to just cover? Yeah, so in terms of questions that might come to me? Yeah. Yeah, okay. So one of the key questions that I always get quite a lot is, so what do investors want to see? Now, you know, as a plug, I've actually got an article on the SyndicateRoom website about this, so feel free to take a look. So go to their website. And on my LinkedIn. One of the things that I will say is that we have a lot of people that come to us with very, very heavy documentation. So, and that's mainly because we work with relatively IP-heavy companies. But what we do is that someone comes to us and says, are you interested? And throws me a 50, 60-page business plan. I don't have time to go through a 50 or 60 page business plan. Fine, so that's interesting to know. At that early stage, I mean, that's something I'll definitely do during the due diligence, but at that early stage, I don't know this company very well, and to be presented with a 50 or 60 page business plan for someone who's relatively time poor can be very, very daunting. So what I would say is that alongside these bigger business plans, make sure you're putting together pitch decks, smaller decks, 15 to 20 pages that are relatively text light, making sure that we understand what your company does. So who you are and what you're trying to do. Who you are, what you're trying to do, what the market you're trying to address is. The key point being is what is the problem and how do you fix it? One of the things that sometimes gets glossed over a little bit as well when it comes to early stage is the value of the team, because they're focusing so much on the product, the business, that they're like, right, so this is the business, this is what we do, blah, 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 and they just basically leave out whoever's behind the business. The team, when it comes to early stage investing, is probably one of the most, if not in some cases, the most important factor. Okay. It's the most important factor because the reality is that you could have the best product on the planet. If you don't have the team to execute it, you're going to fail. Yeah. And that's the reality. Yeah. Likewise, if you don't have that team doesn't give you access to more, then it's going to potentially limit your growth.
So one of the first things that you should always focus on, one of the first things that I always want to take a look at is who is behind this business. Why should I trust them? Why should I take a closer look at them? What they bring to the table? And that's one of the very important things as well.
So give us some success stories since Syndicate Room has opened.
Yeah, okay. So all of our success stories are on our website, so you can see our full portfolio is public. So anyone can see the sorts of companies that we raise for. They can see a breakdown of our sectors, the sectors that we raise for. We've got some companies that I'm particularly proud of, who are making very, very good progress. We've got a Scottish company called TC Biofarm, who deals specifically with treating cancer, who over the years, I think we raised for them a couple of years ago, and since that time have made some very, very startling progress. And are getting into those very large rounds now, are raising from bigger investors, and that's always good to see. Recently, we've had some amazingly innovative companies with some very, very strong lead investment. Companies like Mimica. Mimica deal with smart food labelling. Essentially, it's a label that you feel, and if the product's gone bad, it goes bumpy. It goes from smooth to bumpy, so you can tell if, like, you've always got an expiration date, but the expiration dates are very, very conservative. They're sometimes very, very wrong, because they need to, the food producer needs to protect themselves. So what this does is that if your milk's 2 days out of date, you can actually tell if it's gone off or not, and you can still use it rather than throwing it in the bin like we do with so many other things. We are currently closing around now for an insurance company called Urban Jungle, who we've raised a significant amount for, and again, a very interesting personal insurance company. There's so many companies to go through.
So really, there isn't a specific industry you look for.
No.
You are really just seeing if there's value to the business and if it's suitable for your investors.
We are very, very diverse, and as I mentioned with Fund 28, really the key to early stage investing is not. I mean, obviously you want to pick the winners, but actually diversification is the best marker for success with early stage investing.
And the team.
And the team. Well, the team for the company, but for the investor, diversification is very, very key. And actually, that's what we want to offer. We want to make sure that we're offering that diversification, that potential for diversification
for your investors. That's right. That's exciting. So thanks for joining us on the couch today, Ollie. We have gained some really interesting insight into what Syndicate Room is. And if you do want to find out further information, check out www.syndicateroom.com.